Kitco Mining special coverage of the Mining Forum Americas is brought to you by Metallo Royalty and Streaming.
A wonderful Mining Forum Americas. Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 Mining Forum Americas in Colorado Springs. Joining me now is our host, Tim Wood, Executive Director of the Denver Gold Group. Tim, welcome to Kitco.
Thank you, Paul, and great to have you and the team here. And I hope you've had a wonderful show and lots of chance to interview and catch up on the news.
It has been a wonderful show, Tim. We have been fully booked. Everybody's doing work. Everybody's doing exciting things. So for me, it's been a content-rich environment, a target-rich environment, and I think we've certainly taken advantage of that. It has been a wonderful event. I say that in all honesty. There's been quite a buzz here. Lots of happier faces about, lots of excitement about the future due to the higher metals prices. You've also made some good changes to the layout, which makes it a much more intimate event. And if I may say, you've finally grown into this wonderful event space here at the Broadmoor. Despite the euphoria of the metals prices, it does seem that people were here to work, sleeves rolled up, hard at it, rather than here to party and celebrate. What's been your experience?
Yeah, it's not frothy, right? So you were here in 2011, I believe, or at least you remember the market from then. That was frothy. That was real peak stuff. People spending money that they shouldn't have been spending. This is entirely different. There's a lot more circumspection. So yes, metal prices are at record levels, but you're not seeing people overreacting to that or being excessively ebullient. The companies are very restrained. So for example, we only saw a 6% increase in the number of corporate delegates versus a 38% increase in the buy side. And that's what we're looking for, right? It would be very easy to open the floodgates and have 300 companies here instead of 151. That doesn't help us. Our goal is to maximize the ratio of investors per company, and we're just thrilled with the outcome this year because that was achieved. So tremendous amount of meetings as a result. We got to over 4,000 completed meetings that we'll see on the books by the end of the show in a few hours.
In terms of total number of delegates, how many did you have? How does that compare to last year? And how many meetings did you have last year?
So last year we had a little over 3,000 meetings. So, you know, a good 1,000 more, which is substantial. In terms of attendees, we had 886 last year, and we're at a little over 1,000 this year. So not a huge bump. And that's fine. Again, as I say, what we wanted to see was the increase in the buy side, and nearly all the extra increase in attendees came from the buy side rather than sell side or bankers or company delegates.
There's been a lot of news coming out during the event and immediately before the event. Barrick Mining announcing the Fourmile PEA yesterday. That's been a very exciting talking point for a lot of people. A very impressive PEA that was as well. Barrick last week announced it would sell Hemlo in Ontario for $1 billion US. What are some of the things that you've learned that you didn't know before, Tim, during these few days?
Yeah, those are obviously the very exciting headline-grabbing things. The one thing that I think is a huge sleeper is Reko Diq for Barrick. I don't think the market is giving that even close to even a quarter of its true value in terms of what it could cash flow, even on a discounted basis for Barrick. So that's one I'm really interested to see how it continues to grow. Obviously there are concerns about jurisdiction being in Balochistan. That's understandable. But man, the metrics when you look at the potential for that project are incredible. It was also great to have breaking news from Agnico that they're not going to bid for Teck. There had been a lot of chatter in the market about that. So that was good to have Amar make that statement from the stage and tell us that it's absolutely off the table. So Anglo-American and Teck it is. Well, I guess depending on what the Canadian government does, right? They want Anglo to domicile there, getting a little resource nationalistic.
Well, from what I've been reading, they want a little bit more than just Teck to domicile there. And it doesn't surprise me that Agnico's not bidding for there. I perhaps expect more a stink bid coming in from Glencore or somebody of that like that.
Potentially. But, Anglo and Teck have got those adjacent assets. So it makes sense for them to avoid overcapitalization And it really is time to combine those assets. In the same way you might look at the Nevada gold mines and see that there's an opportunity to do some consolidation and rationalization there to extract more from those mines.
With the way Fourmile is shaping up, Tim, in a couple of years' time, Barrick has the put option to put Fourmile into the Nevada Gold Mines joint venture that it operates with Newmont as the junior partner, under which Newmont could be faced with a very tough decision of paying a lot of cash, billions of dollars in cash, to its fierce rival, or diluting its position in the Nevada Gold Mines joint venture. That's a tough one for the board.
Yeah, that's going to be a decision. But, this is the nature of mining, right? When you have a tremendous discovery that then develops into the extent that Fourmile is shaping up to be, these are transformative things. So it's that single asset that goes from being very speculative to suddenly being very foundational, very transformational for an entire district, as opposed to just one company.
Okay, we had Mark Bristow on the show yesterday. We talked at depth about Reko Diq and some of the security issues there and the challenges there, and how the company is looking to face those. Not looking to face those, is facing those. And it does seem that for a lot of people, they can't get past Pakistan and Baluchistan to see the value. I recommend our viewers to watch that because it was very detailed and we went into quite a bit of depth there. In terms of Newmont announced recently, just last week, that it would voluntarily delist from the Toronto Stock Exchange in Canada. CEO Tom Palmer isn't here. Should we read anything into that? Is Newmont stepping away from North American investors?
No, I don't think so. That's just a rational decision. If you're not getting the trading volumes, it's expensive to maintain a listing anyway. So if you're not getting the trading volumes you need in that market, because it's so easy to buy American domiciled stock, then it's just wise to consolidate it. It's a different story if it's Australia, because of the way Australia is restricted from some of its external investments. The funds have got very specific national mandates. But it's just so easy to buy the stock off any of the American exchanges that it does seem redundant to have both a TSX and a US listing, especially for a US company.
Now, playing devil's advocate, Tim, if Newmont, the largest gold company in the world, can't generate any volume on the TSX, why should anybody else bother? Why aren't more companies taking sort of more senior US listings to benefit from the investor base here?
And that is a devil's advocate position. Look, Toronto and Canada as a whole have done extremely well in capturing mining capital markets, right? So they outcompeted London. London has shrunk tremendously, and they outcompeted the United States. But a lot of that had to do with US regulatory constraints around what you could report. And Canada benefited because capital will flow to where there's least resistance. And the least resistance in terms of being able to report mineral resources as opposed to reserves only was the catalyst that started to push everyone north, and that allowed them to capture that business. Now that you can report in a similar way that you can for 43-101, there's not necessarily a big advantage in terms of timing to be in Canada only or to have a dual listing. But Canada remains an incredibly important market, very dominant in the world of mining capital formation. The capital skills combined with the mining engineering and the services skills, Canada is not going anywhere. Toronto is not going anywhere. It will remain critical, and it is just so important for capital formation that I hope it continues to do very well.
Fair enough. I think you're referring to the SK 1300 reporting regulations there in the US. Now, obviously I've spoken with and met with a lot of people here at the event this year. Some key themes appear to be that investors are looking for growth again. Investors are asking companies about their capital allocation strategies, how they're evolving in the face of higher cash flows due to the higher metal prices. What are some of the things you're sort of picking up from that point of view? Yeah,
obviously as margins expand, there's an inrush of cash. and the investors want to know how that's going to be deployed. In a traditional sense, you've got a few options. Do you invest more of that into exploration? I think we're going to see exploration budgets explode. There are more Fourmiles out there, and the companies need to go hunting for them, and I think they're going to find them. I'm excited enough to say that I think we're going to have another major discovery in the next 4 or 5 years. There's just going to be very significant for the whole market. And that's going to come from the money invested from this part of the cycle. They can return money to shareholders through dividends. I certainly prefer that to just doing stock buybacks. I think that is the more transparent way to do it than just doing the stock buybacks. Ultimately, in some ways, we also resemble the airline stocks. And if you remember, there was a boom and bust cycle continually for the airlines. And that stopped when they addressed their consolidation problem and when they started to manage the loads and the pricing better. And it's been a very long time since a major airline went bust. And I think we've transitioned into a very different phase where the mines are now able to be a little more resistant to the cycle, and you're not going to have these extreme swings that we used to see. And I think in a sense, maybe up to 2015 was the end of the old style of cycle, and now we've come into a new phase, and I would expect us to see a little less volatility and a little more, let's say, corporate responsibility, not to take anything away or be negative about management. It's just the way things used to run. I think there's a lot more capital discipline being demanded by investors, and there's a lot more willingness by companies to be circumspect and judicious in how they're handling other people's money.
I think that's a very interesting and prescient analogy you made there, Tim, with the airline industries. You mentioned earlier in our conversation about the mega merger in the copper space, $53 billion, Teck Resources and Anglo American. The last mega merger phase in the gold space was 2018, 2019, resulting in the structure we have today. We've now seen the emergence of several new single asset producers as Newmont and Barrick are divesting assets. Are we again approaching a consolidation problem in the gold space?
Yeah, but let's remember that further down the chain, we have seen a lot of juniors fall by the wayside in this last part of the down cycle. And I think it's going to be hard for some of those retreads, renames, repackagings to come back onto the market. The days of being able to run a mining stock as a form of just a perpetual annuity to your salary, those days are coming to an end. The investors want results, and they want projects. They don't want these infinite timeline projects that have got a 50-year capital raising profile and no prospect of production. So that's where I see a significant change, is developing at the bottom of the market and then this discipline at the top end. The other thing that I think is worth mentioning is remember that the other metals benefit from being a lot more vertically integrated. So they control more of the final pricing. And the gold sector has yet to develop a way to appropriately address that. But I think the emergence of some blockchain options, the emergence of Tether and stablecoins generally, I think presents the opportunity for a new GLD in a form that could be a stable coin where the industry can start to have more control over what the price is, as opposed to just taking whatever the USD equivalent is as soon as that doré bar leaves the mine.
I think it's interesting you mentioned Tether, because that's perhaps been one of the biggest and most impactful news stories of the year so far, because of the change, the dynamic that is perhaps ushering in. Tether's obviously just one company, albeit a very big company. I understand they've got, let's say, $10 billion of physical gold that it's purchased. Are we on the verge of a more meaningful, a more dynamic change in the gold sector if companies such as Tether are starting to come in and get a really big foothold?
Yeah, and I think we need to be careful about not overhyping it. Tether is not going to go out and buy 10 mining stocks. they have taken a very focused, very deliberate strategy, which is to chase the royalties. So, they have a less risk tolerance than to just go and buy a regular asset. So the royalties give them that ability to reduce the risk somewhat. But I think some of the chatter I've been hearing is some of the CEOs are expecting that they could just offload to Tether in the next year or two. Very unlikely. But what is important in the sense is there's a philosophical change where we now have a real financial product being linked and backed by physical gold as well as new gold. And I think that Tether example is going to spread to other examples like Circle. And Circle is fully licensed financially in the United States with the regulators, whereas Tether is not. So I can see Circle and some of the others. Figure Markets is another one to watch. Those are going to be very important players, I think, going forward. And our industry needs to court them and continue to develop that link. The stable coins are the future. It's just a tremendous product. And the social value of the stable coins in markets where folks are unbanked or lightly banked is amazing to see. I mean, this is just a real innovation in financial history.
Okay, I would agree with you. I wouldn't have thought Tether would want to actually run mines by itself or on its own. Another couple of themes that have been very productive here have been for companies with projects here in the United States, the accelerated permitting that seems to be coming under the Trump administration and how they may be able to benefit from them. What are some of the things you're hearing from that point of view?
Yeah, it's tremendous. It's very encouraging. And I think there's been a realization that just as onshoring needs to be important to reduce the fragility of these global supply chains, which we saw during COVID, just in time doesn't work for a lot of things. And when you become overly dependent on one country to be your supplier, and here it's the United States with China for most of your manufacturing, you've got a problem. And as part of that is we exported a lot of our mineral processing capacity and even the mines themselves by pricing them out of the market. So to see the administration starting to understand that if you do not have a mining base, you do not have the ability to have a manufacturing economy and to make your own things. You cannot be the world's superpower if you do not have your own steel industry. So hence we saw the protection of the steel industry to avoid that being offshored. South Africa is a great example where the steel industry has collapsed through a lack of proper support because it got completely undercut by cheap foreign steel. Every country needs to be able to make its own steel, and that goes for all the other minerals as well, especially when your defense is so dependent on some of those products.
Okay. On the geopolitical theme, Tim, you had US Ambassador to Mali here talking about the political situation there, participating in a panel with Clive Johnson, CEO of B2Gold, and Peter Moroney, CEO of Allied Gold. This seemed to draw a lot of interest and was very, very well received. That would seem to be the kind of thing that would be very worthwhile repeating in future years, perhaps with other jurisdictions or on other particular hot topics.
Yeah, and we were very glad to be able to facilitate that engagement, to make sure that the companies knew the ambassador was coming with some folks from Mali. It was just very unfortunate that we've seen certain interests in the United States who were here 2 years ago protesting Mali and trying to force capital out of investing in Mali. And now the poor ambassador is here pleading for investors to go back. So at the highest level, we have to resolve this push-pull within, especially the American government, about what it is they're trying to achieve. They need to get back onto the same page. And some of the nonsense that we've seen, especially the targeted attacks against Barrick and especially Mark Bristow, the threat to arrest him, that stuff has got to stop. And Mali will not get new foreign direct investment unless those threats are taken completely off the table. In much the same way that South Africa suffered when it introduced legislation to nationalize mining resources, it received less foreign direct investment than the Congo did during its civil war, which just tells you how important those comparisons are. The miners can handle the risk of potential war threats around them, but not the loss of their rights to own those minerals.
Okay. Tim, we love forward-looking statements on this show. So what are some of the things you're perhaps looking forward to for next year's mining forum?
I mean, obviously, we all want higher metal prices, right? But, the thing about Denver Gold Group is the board has been very supportive for us to rebuild the balance sheet, and Denver Gold Group is now essentially immune to the cycles. So we're able to operate irrespective of whether it's a down cycle or an up cycle. We can maintain the same level of service, the same level of finish that you see at the show, whatever happens. Obviously, we all want to see more growth, and I think we're going to do that. Again, using that airline analogy, I'm hoping to see more seats full on more flights all the time, and we just look forward to continuing to provide our members, we as a not-for-profit trade association, with the best value, the best opportunity to see the most number of investors in 2.5 days than you can get anywhere else. And, to that end, we had a peak market cap on Monday for the aggregate of the whole floor of $876 billion. And the market cap weighted average attending investor holding was over 15%. There are very few other places where a company can go and meet 15% of its shareholder base and engage with them directly, and vice versa for the investors as well. So that is our focus, continue to do what we do best, which is put those two stakeholder groups together, and we just stay out of the way and make sure that it happens as smoothly as possible.
Well, it has gone very smoothly this year, Tim. Kitco will certainly be here next year, assuming we're invited, of course. Congratulations on a great landmark event, Tim Wood. Thank you very much for joining us today.
Thank you, Paul, and we look forward to welcoming you back next year with the team, and may you have many more good interviews and enjoy yourself for the rest of the time here.
Well, for me, it's easy when the companies are doing lots of good work. It makes it very easy to get a good interview. We have almost come to an end from the 2025 Mining Forum Americans, but we have recorded an incredible amount of great content, great interviews with some of the leading CEOs in the sector. So hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining special coverage of the Mining Forum Americas is brought to you by Metalla Royalty and Streaming.